The difference between success and failure in the stock market has nothing to do with your skill set. It has everything to do with your mindset. I'm Evan Lazarus, Chief Knowledge Officer and Mentor for T3 Live. I'd like to invite you to an exclusive trading education event in Charlotte, North Carolina on Saturday, March 16th. Attendees will learn what we believe to be the 5 biggest mistakes that plague the average trader and how to overcome them, with a specific focus on trading psychology and risk management. Reserve your seat at t3live.com or call the number below. I look forward to seeing you there.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we started the day, futures were down, I think 4 or 5 handles. You had Asia weak overnight. Some indices were also a little softer. The Nikkei was up the way the trend has been for quite some time now. So we weren't sure what to expect. So what we do as traders is we put if-then scenarios in our head on how to deal with the action. And recently there's been a lot of two-way action. You've had this wedge type formation being formed as we've been trying to figure out if we need corrective activity or if we're just going sideways for another move higher. And what we've been talking about is can we hold higher? Can today hold the upper end of what this wedge pattern has looked like in order to create higher prices? So you look real quickly at the chart of the spiders here, and you will see here was that ascending channel that got a little wishy-washy. Here was your engulfing day that engulfed the 8th day. All of a sudden we came down to the 21 days. So if you took some risk off here, big deal. Okay, then you had a little bit of a bounce back, and then this was a very wide-ranging engulfing bar that could have got you out a lot of positions. I think this got me in almost into cash. Okay, but what happened? You had a little bit of a red dog reversal. With that said, you had some follow through. So if you did get a little bit more risk averse and you saw some stocks starting to continue to act well, no reason why you couldn't put back some positions in this 4 or 5 day area. You didn't have to buy this day into the close because you had no idea if we would continue to this lower trend. But once we reversed, you remember we talked about the red dog reversal of 149 and you saw our move back up, and then we started holding higher. It made sense to stick with some longs. You didn't have to be all in, but no reason to fight what the current trend has been. So with that said, this was Friday's low of 152.34, and this is where we opened to just close on the highs, knocking on the door of new highs once again. So with that said, you have to really measure your time frame and your tactics. At T3, we have a bunch of products that we offer, from the virtual trade floor, which is a tool for you to actually see our positions, see what we're long, talk on a radio so we could talk to you through what's going on with the action, to our off-the-charts product tonight, and even our price point sheet. So when we talk about certain things on Twitter and you don't get the full story, it's not because we're just talking about our exits and not talking about our entries, or we're trying to be a Monday night quarterback, whatever you guys all call it. The bottom line is you don't get the full story. Okay, our subscribers get the entire story from the night before to the morning of to the virtual trade floor. And we do what we can to try and give Twitter as much, but again, there's only so many thumbs that we can maneuver on our keyboards with our 6 or 7 monitors, whatever we're doing, to keep everyone in the loop. So what I want to show you is something from what we do every day, which is called the price point sheet, because I talk about it at times. I'm going to put the digital version on right now that we give to our traders who subscribe for it every morning. What you do is you see in it, the top is a bit of the market commentary. And then if you go look in the middle, in the gray area with all the stocks, those are the stocks that are pretty much on my go-to list that I look at every day to see if there's opportunity for cash flow, see if there's opportunities for trends to continue, to just basically see what type of action you could put in there. Okay, you have the resistance 2. When you see an action area, that means there's a price point that you could add to potential longs or another tier for cash flow versus your swing long, or if you flat it, you could add to it, or if you flat it, you could just trade it for a day trade with some thoughts in the comments. So if you go back to me, okay, one of the first stocks on that price point sheet is Google. Google's a stock that we've been talking about, best in breed. It was my high beta tech stock of the year 2 years ago at 660. It's now at historic highs. A lot of nice trades along the way. So if you were a swing trader in it, you're doing well, and maybe today you said, okay, it's been flagging above the 800 level, looks good for cash flow. If you on my price point sheet, we have like 807-ish, whatever was there. So if it goes through there, I could add a tier for cash flow, then maybe take it off. Or if you're not in Google because you're a little risk averse and you don't like to carry positions overnight or long term, you say, you know what, Google's down $1 because that's what Google was today. And it goes through 807 and then shows commitment, you take it for cash flow. So now you look at Google, technically, you'll see this is the pattern. Okay, this was the following of the 8th day. Here's the gap up after earnings. Here's your sideways action. On the virtual trade floor, you would have seen that I started to get long, and I believe on Thursday, stayed with it on Friday, and then today came in long, and then it went above the highs. It was a good add, and then I sold it a little early today. But, you know, again, I had like 7, 8 longs on, and I needed to take trades and whatnot. So all in all, if you've been trending with this or staying with this as a swing trade, congratulations. If you're in it as a macro investor from this breakout, from this year-long channel, which is what we talked about with Brian Sullivan on Street Signs for this breakout, or when it went above the historic highs, congratulations. Or if you said, I'm not, you know, involved in this thing, I don't like to take stock, I'm risk averse overnight, blah, blah, blah. You know, once it traded through there, you could have made $4 in about 10 seconds, and then it wound up closing at 821, showing commitment for the day. Okay, if you go to the price point sheet again, the next stock that was on there that had a level was Amazon. Okay, Amazon, if you look closer, was 267, okay, which also was resistance. Because, you know, that downtrend, you don't know if it's a buy area or resistance. You have to actually monitor the action. So if you go to the chart of Amazon, you will see stock opened also down a little bit, and then it traded through what has been resistance that turned into an action area. This was, I think, the line I drew from the morning call saying if Amazon can get above 267 with some authority, it could be a good trade. So that was the line from the morning call if you watched it. Wound up turning into a decent trade, right? You could have been potentially long versus support. This could have been your tier 2 add, or if you didn't have it, you know, long or whatnot, you could have said it's a decent setup for cash flow today if you were worried about the market and worried about whether or not the ECB is going to be accommodative Thursday or the jobs number Friday. It didn't matter. Today it worked. You could have sold it on the close, made yourself some money. So with that said, you know, I'm not going to go through the entire sheet. You know, you just saw it. You could watch this back a few different times. I think some others work. Some maybe are still waiting. But the bottom line is there's lots of ways to skin a cat, and you have to know your time frame. If you fight the market with opinions, you're not going to get anywhere. Overall, market's wedging. The financials had a nice move today. You could even look at them. XLF. You look here. This already started to break through the highs of this area, so showed you some health. Goldman Sachs also trying to perk up, you know, above this 152.40 perhaps. That'll, you know, clear the way for higher prices. Bank of America was weak earlier on, but, you know, still holding 11, looks okay. LinkedIn, let's not go to LinkedIn. Let's go to Wells Fargo. I actually entered a little Wells Fargo today. You know, Warren Buffett said it's actually cheaper than Coca-Cola, so maybe that makes some headlines. And overall, it's still just coming out of like a multi-month channel here, so it could, you know, get some traction. We shall see. So the banks were somewhat of a vehicle today. Also, you had retail. Right? Retail is something that I haven't really been involved in that much until last week. I'm like, wow, Home Depot's at historic highs. Maybe, you know, we'll get some better action in retail. So the two that I chose, because I can't choose everything, my bandwidth isn't that big, my risk tolerance isn't that high, and I can only do so much. You know, so I went with Walmart, and, you know, let's take a quick look at Walmart. You know, Walmart had a really nice pattern. This is when we put it as our retail stock pick of the year. You know, this was a really nice move. Your breakout failure has been consolidating, and even after all that hoopla of that email and this and that, boom, you know, it hung in there really well, let the moving averages catch up. I think I bought it on either Thursday or Friday, I don't remember. Your ad was through 72. That might have been on the price point sheet also. And look at this strong close in Walmart. Okay, nice swing trade. If you were here, this could have been tier 1. Here was your in motion for tier 2. Maybe you took off tier 2 at the end of the day, and now you're back to tier 1, and that's how you manage your positions. That's why I use a tier system. I talk about it's a tier system, and that's why, you know, that's how you can maneuver the trade. And if you look at Target, gorgeous. Look at that. Even after the earnings, it started down, pow, through the highs here. You know, lots to like. Nike, I had a long, didn't do anything today. Maybe tomorrow. So I just stayed with my position. Okay, it's still showing a triangle. Did it show a little relative weakness today? Maybe it's because of the news out of China. They think no one's there is really buying sneakers. Who knows? Anyway, still looks good for higher prices. But again, just a group that I haven't really been focusing on. 2 weeks ago, none of them were on my virtual trading floor. All of a sudden, Walmart popped up on Thursday or Friday, and I don't have any control over Walmart or the price action. All it is a big mega cap that looked good. I went in there, my community saw it. Some people went with the trade, some people didn't. Sometimes it works, sometimes it doesn't. But historically, I tend to be pretty consistent with picking and choosing my spots. And you could pick your own time frame with them as well. Home builders today didn't really look there, but doesn't mean it's not good. This actually wound up trading near the highs of the day, retesting the trend line. I drew this in the morning call with Brittany this morning. Looks good, right? Everyone was also talking about the industrials a little bit today. They also, still holding higher, not as much power today, but still hanging around. No reason to just be fighting these. You look at the transports, wow, new highs in the transports. Don't they say that that's a Dow theorist special, where if the transports make new highs, typically the Dow Jones follows suit and it's healthy? So a lot of skepticism still, but transports are, had a wide range bar back to the high, showing relative strength, held higher and blasted through first. You know what? These are rules. These are trading rules that you know and that you follow. You don't have to worry about everything underneath the sun, because that's what the media tries to make you do. They've been trying to get you to obsess on whether the sequester is going to really have an effect, or there's so many things out there. You have to pick and choose what you want to look at. As far as some, let's see, LinkedIn, I wanted to just show you real quick. In this arena, which was best in breed social networking. Here's your gap up after earnings. This was a nice tight range. We did have this on the price point sheet last week around 161 because it had a pattern, and then boom, new highs. As far as Facebook, I still think it's hanging around. I like it. I'm still long it. Got long it last Thursday on this red dog reversal. It's holding in here. If it starts to break above this area, I do think it looks even better. You go to a bit of a longer term chart here, and there is potential growth here, and the market's thirsting for growth. But again, it's got a lot to prove, and it's going to have a lot of obstacles to go over. And right now, this is the first time it's acted well since earnings, so it's worthy of a tier 1, and then we'll see if that can continue. Today it was kind of funny. I bought Microsoft. I'm just looking for things to do, things that might go up with the market. I'm not trying to get back to 14, 15 positions long. I'm just seeing what could work out. And you look at Microsoft, and Microsoft, not a barn burning trade. It hasn't been able to really break above levels yet, but look at Microsoft. Maybe people need to be long and they think there's value there. Took back the 8 and 21 day, closed pretty strong right into this resistance, so it was worth a trade. Cleared this area, I started buying it, I think, around 28, so it's working so far. We'll see if it could take back the 200 day. Stock is well off the highs of the year or of last year, and worthy of a try. We shall see. BlackBerry got stopped out on Friday. Doesn't really look that good. I drew this wedge type pattern and starting to break to the bottom end of it. It did not break out above that 1365, so that is off the table for now. You look at this supportish area, and it looks like it's starting to break. So hopefully, you stopped out of some today. If it starts getting below 1285, I think it's in trouble again. We shall see. As far as gold, still under pressure. Here's your intermediate trend that broke to the downside. Hopefully, if you were long, you got out of the way. If you're looking for a new entry in the short side, perhaps you got it right here when it didn't fill the gap, and now it's hovering above macro support. If you are a gold bug or you're a macro gold trader, you need to worry, or you need to at least know where this is, where this 148, 150 is. So with that said, I just think that there's a lot of different types of strategies going out there. There are places to be short, places to be long. You really have to know where you want to live, the time frame you're going to use, and you can use a lot of the T3 Live resources from off the charts, price point sheet, virtual trade floor. You can pick and choose what the time you want to allocate. So on Twitter, we're trying to do as much as possible to get you guys as much information. But again, I have 2 thumbs and a lot of keyboards and a lot of screens and a lot of radio time. There's only so much time in the day. So again, hopefully you had a good day. Hopefully you're not fighting the tape, and hopefully you're learning how to approach the market, because there are stocks making historic highs. There is a lot of movement, and you might as well play into it or trade it or embrace it versus fight it. See you tomorrow morning at the morning call with Brittany. Have a great day.